Welcome to Money is Freedom, a podcast exploring how finance and freedom connect in our lives. Created from thoughtful research and narrated by Notebook LM AI, this series brings you clear, meaningful insights into finance and beyond.
Welcome to episode 43. Today, we're taking a deep dive into the future of artificial intelligence, pulling insights from a recent AI Ascent 2025 keynote from Sequoia Capital, the venture capital powerhouse based in Silicon Valley. Sequoia discussed the current state and future potential of AI, highlighted the rapid pace of AI development, and its potential to significantly disrupt and expand markets, drawing parallels to the impact of the cloud transition. Tune in as we unpack what's happening now and what's coming next in the world of AI.
Today, we're jumping straight into Sequoia Capital's AI Ascent 2025 keynote. We know you want the core insights on AI's future, fast, without getting lost in the weeds.
Yeah, and that's exactly what we aim to deliver. This event, it brought together some really sharp people in AI.
Right, lots of different perspectives.
Definitely. But there was this common thread, this idea of a massive trillion-dollar opportunity in AI, but also, how do you actually navigate it? It's moving so quickly.
Exactly. So our goal today is simple. Pull out those key insights for you. We'll look at where AI is now, where it seems to be heading mid to long term, and crucially, what are some, actionable takeaways?
Let's start right there with the so what. Why should you, listening now, really care deeply about this AI shift?
They used a pretty interesting analogy comparing it to the cloud transition.
Right, but they immediately pointed out a massive difference in scale. You might think, okay, AI, another service layer like the cloud was.
But the numbers tell a different story. The cloud market, big as it got, maybe $400 billion, was roughly the size of the software market when it started.
Exactly. Now, contrast that with AI. The projection is that the market for AI, and this includes services and how it changes software itself, could be an order of magnitude bigger, right from the start.
An order of magnitude bigger, that's huge.
It really is. And it's not just about adding a new service. The key insight, I think, was that AI could fundamentally change what software is.
How so?
Well, think about moving from selling tools, which fits neatly in a software budget, to selling actual outcomes that might pull from completely different budgets, like labor budgets.
Okay. So you're not buying the shovel anymore, you're buying the finished whole, so to speak.
Something like that, yeah. It potentially expands the whole pie, not just slices it differently.
It really reframes where value gets created. Now, beyond just the size, they hammered home the speed, the acceleration.
They did. They used this layer cake analogy, which I thought was quite effective.
Explain that a bit.
So the idea is that each big tech wave, like the internet, mobile, cloud, builds on the previous layers. AI is the latest layer.
Okay, makes sense.
But two key things here. First, the ingredients for this AI layer, the computing power, the networks, the data, the talent, they're already pretty mature. They're in place. AI isn't some distant dream.
Right, the foundations are solid.
And second, the pace of these layers is accelerating. Each new wave arrives faster and spreads quicker than the last. So AI isn't just bigger, it's happening much, much faster.
That classic hockey stick curve, but maybe even steeper this time.
Precisely. And they dug into why it's adopting so fast. What's really fueling it?
Okay, what are the drivers?
Three main things. People know about it, people want it, and people can get it.
Simple but powerful. Awareness first.
Yeah, you can thank things like ChatGPT for making AI incredibly visible almost overnight to the general public. It's not some obscure tech anymore.
True. Then the desire.
Amplified by, massive online communities, Reddit, X, places like that. They act as global accelerators for discovering and wanting new tech. The buzz built incredibly fast.
A built-in demand engine.
And finally, accessibility. Nearly everyone's online. The pipes, the infrastructure, it's already there for AI to spread.
Unlike the early cloud days where you had to build out the infrastructure and convince people.
Exactly. AI landed on a stage that was already built globally.
It really shows how tech distribution itself has changed. Okay, so massive opportunity, accelerating fast, got it. But where do you actually play to win? That's the million-dollar question, or I guess the trillion-dollar question here.
Right. And they acknowledged, look, maybe the completely blank canvas isn't quite as blank as a year ago, but the white space is still enormous.
So plenty of room still.
Absolutely. Yeah. If you look back at previous tech shifts, internet, mobile, most of the value wasn't actually in the core infrastructure. It was in the applications built on top.
E-commerce, social media, all those apps on our phones.
Exactly. That's where the bulk of the value landed. And the initial thought was AI would follow that same pattern, build applications on top of the core models.
But there's a wrinkle now, right? With the foundation models themselves getting so capable.
That's the key evolution they pointed out. These big foundation models, they're not just static platforms anymore. They're getting better and better and starting to do things that look a lot like applications themselves.
Making it more competitive at that app layer.
Definitely. So for startups, or anyone building here, the advice was pretty clear.
Which was?
Focus customer back. Really, really understand a specific customer's pain point. Go deep into a vertical industry or a specific business function.
Solve a real specific problem.
Yes. Tackle something complex, maybe niche, where AI can offer clear value. And maybe, for now, that solution even involves having a human in the loop. It doesn't have to be pure AI magic from day one.
Practical advice, they mentioned something called the Leone merchandising cycle.
Yeah, it was a quick mention, but basically a framework reminding everyone that even with AI, you still need to do the basics of building a business. Develop the product, engineer it, market it, sell it, support it. The fundamentals don't disappear.
Right. The tech is exciting, but the business building still matters.
And this ties into how you build a sustainable advantage, a moat. There's this tension, right, between focusing purely on the coolest tech, the tech out view, versus starting with the customer need, the customer back view.
And they argued for the customer approach?
Strongly. They argued that long-term defensibility in AI is increasingly going to come from that deep customer understanding and the unique value you build around it.
How do you build that moat practically? Any examples?
Yeah, they offered a few strategies, things like building an end-to-end solution, not just a point tool.
Becoming indispensable to the workflow.
Exactly. Or building data. And the other big one was getting really industry specific, like open evidence in healthcare, Harvey in legal. Deep domain expertise creates a strong moat. It's all about that connection with the user.
Okay, that makes sense. Now, they also talked about specific things AI companies need to watch out for. This idea of revenue vibe versus real revenue caught my attention.
Yeah, let's unpack that. Revenue vibe is like the initial excitement, the buzz, maybe some early signups. It looks good on the surface.
It might be superficial.
Exactly. Real revenue, or maybe better put, real engagement, is about sustainable user behavior. Are people actually adopting it, using it regularly, sticking with it long term? Retention. That's what matters.
So look past the hype, look at the core metrics.
Absolutely. And tied very closely to that is what they call good vibes with customers, which is basically trust.
Trust seems huge right now.
It's paramount, especially now while the tech is still finding its feet. If your users trust you, trust your vision, trust that you'll iterate and improve, that's maybe even more valuable than your initial feature set.
Interesting. Build trust first. What about margins? AI can be expensive to run.
They address that, yes. Initial gross margins might be lower because of compute costs, the cost per token to run the models.
Right.
But the expectation, or maybe the hope, is that margins improve over time. Two reasons. The underlying cost per token is generally trending down, and companies should be able to charge more as they deliver more value, moving from tools to those outcomes we talked about.
Value-based pricing as the AI gets better.
Potentially, yes.
Yeah.
And finally, they circled back to the data flywheel idea.
With a key condition, right?
Yes. A data flywheel isn't magic just because you have data. It only counts if that flywheel demonstrably improves a key business metric. Better product, better user experience, higher retention, something tangible. Otherwise, it's just data sitting there.
Got it. Data needs to do work. Okay, shifting gears slightly, they talked about the sheer momentum behind AI, this feeling of inevitability.
Yeah, they used the phrase, nature hates a vacuum. It said there's this tremendous sucking sound in the market, pulling AI in everywhere.
That's a vivid image. What was the point?
The main point was, don't get overly distracted by macroeconomic headwinds. Yes, those exist. But the fundamental pull of this technological shift, this AI adoption wave, is potentially so strong it overrides typical economic cycles.
So the tech trend is the bigger force right now.
That was the argument. The implication being, you need urgency, you need velocity. If you're sitting on the sidelines, someone else is probably eating your lunch or inventing a new kind of lunch entirely.
A clear call for speed.
Right.
Okay, then they did a kind of year in review, looking back at progress from both the customer side and the tech side.
Right, the customer back and technology out perspectives. And the customer data was pretty compelling.
What stood out?
Engagement. Specifically for AI native apps, things built around AI from the start. They showed how the ratio of daily users to monthly users for platforms like ChatGPT has shot up. It's approaching the stickiness of established platforms like Reddit.
So people aren't just trying it once, they're integrating it into their routines.
It seems so. It suggests AI is delivering real, ongoing value, not just novelty.
And they mentioned real-world impact expanding too.
Yeah, beyond just chat. Areas like advertising, education, healthcare, they name-dropped open evidence again, suggesting AI is making real diagnostic differences. And then there was the her moment for voice AI.
Ah, yes, like the movie, meaning
Voice generation tech has gotten so good, it's basically crossed the uncanny valley. It sounds human, which opens up, well, a ton of possibilities.
huge implications there. Any other standout applications?
Coding. That came up as a major breakout area. Tools like Anthropic's Claude 3.5 Sonnet finding real product market fit, making developers significantly more productive.
That's a big one, changing how software gets built.
Absolutely. Now, on the technology outside, the pure tech advances, they did note that maybe the pace of just making the biggest models even bigger, that pre-training race, might be slowing down a bit. Some low-hanging fruit might be picked.
Okay, a potential plateau in just sheer scale.
Potentially. But they quickly highlighted key areas where breakthroughs are happening.
Such as?
Better reasoning. AI getting better at actually thinking through problems, not just pattern matching. OpenAI, I got to mention there.
Okay.
Also, big strides in synthetic data, creating artificial data to train AI, which is crucial. Better tool use, AI using external software and APIs more effectively, and better AI scaffolding techniques to build more complex, reliable AI systems.
So refinement and capability building, not just raw size.
Exactly. Pushing towards more sophisticated tasks.
Okay.
And they also praised innovation happening right at the edge of research and product, mentioning deep research in Notebook LM, which is now called Hue, I believe.
Taking cutting-edge ideas and making them usable.
Right. Which brings us back to that key question.
Yeah.
In this whole AI stack, from the chips to the apps, where does the most value end up?
And their answer was still
Firmly at the application layer. Despite the foundation models getting better, they believe companies solving specific customer problems. Harvey. Open evidence for the examples, again, are where the biggest value capture will be.
even with the increased competition from the models themselves.
Seems so. The opportunity to build targeted, user-loved applications is still seen as massive, though they did give a nod to Jensen Huang at NVIDIA, of course.
Can't ignore the hardware layer right now. He's kind of the king of the stack for the moment.
You could say that. Yeah. But then, focusing back on apps, they pointed to the first real cohort of AI killer apps emerging.
Who made the list?
ChatGPT, actually. Harvey, Glean, Sierra, Cursor, Abridge, Listen Labs, Open Evidence. A diverse group, but all delivering significant value.
And looking forward, they see more agent-first companies.
Yes, companies where the core product is an AI agent. Moving beyond today's often brittle prototypes towards really robust, reliable agents that can perform complex tasks.
How do we get to those robust agents?
Two main paths are discussed. One involves clever orchestration, coordinating multiple AI models and tools, with really strong testing and evaluation to ensure reliability.
Okay, managing complexity.
The other path is creating agents that are fine-tuned specifically for an end-to-end task, really specialized. LangChain and OpenAI were mentioned as enablers here.
And this leads to the idea of vertical agents.
Exactly. This seemed like a really big prediction. Agents trained with deep expertise in just one specific domain.
Like the examples they gave.
Yeah, really striking ones. An AI agent beating human penetration testers at cybersecurity. AI outperforming humans in complex DevOps or network troubleshooting. It suggests a future of highly specialized AI experts.
Wow, AI specialists.
Which then connects to this idea of an abundance era. Code was the first example. If AI makes certain kinds of labor, like basic coding, super cheap and abundant.
Then scarcity shifts elsewhere.
Right, to things like taste, judgment, quality control, creativity. It fundamentally changes the economic equation.
That's a profound shift. So taking that agent idea further, what were the mid to long-term predictions?
It moved from individual agents to agent swarms. The idea that agents won't just work alone, but will collaborate, coordinate, form interconnected systems.
Okay, teams of agents.
And that evolves into the concept of an agent economy. A future where these agents aren't just passing information, but are actually transferring resources, making transactions, operating with some understanding of trust, like autonomous economic actors.
Agents doing business with each other and with us.
That's the vision. But, they cautioned, getting there requires solving some major technical challenges.
Like what?
First, persistent identity. Agents need a stable sense of self, memory, history to build reliable interactions over time. They can't just reset every conversation.
They need to remember things, learn.
Exactly. Second, seamless communication protocols. We need the equivalent of TCP/IP for agents. Standard ways for them to exchange information, value, and signals of trust. They mentioned MCP as a potential standard emerging.
A common language for agents? Makes sense.
And third, maybe most critical, security. If agents are making autonomous transactions, trust and security become absolutely vital. You need to know the agent you're dealing with is legitimate and secure. That's a huge challenge and opportunity.
Absolutely. Trust in a world run partly by autonomous agents. Okay, beyond the tech, does this require us to change how we think?
Definitely. They highlighted 3 key mindset shifts. The first is adopting a stochastic mindset.
Stochastic meaning?
Probabilistic, not deterministic, moving away from expecting computers to give the exact same answer every time, like 2 + 2 = 4. AI responses might vary slightly, be probabilistic, but still correct within context. We need to get comfortable with that uncertainty.
Right, it's not traditional programming.
Second, a management mindset. As we work more with agents, our role shifts from doing the task to managing the agent. Understanding its capabilities, its limitations, guiding it, overseeing its work.
Less operator, more manager.
Precisely. And third, embracing increased leverage, but also accepting less certainty. Agents can amplify our output massively, let us scale faster with fewer people. But that comes with relying on these probabilistic systems, managing that inherent uncertainty and risk.
More power, more potential variance. A trade-off.
It seems so. Ultimately, the picture they painted was one of massive transformation driven by these agents.
Exponential leverage, faster scaling.
Reduced human workforce in some areas, perhaps. And eventually, maybe these individual agents merge into something even more complex, like neural networks of neural networks, fundamentally changing work, companies, the economy.
It's a pretty radical vision.
It really is.
Yeah.
So, to sum up this deep dive into the keynote, it's a huge AI opportunity moving incredibly fast. The tech is advancing rapidly, especially around reasoning, tool use, and specialized agents. Value seems to be accruing at the application layer, focusing on customer problems.
And the longer view points towards this transformative agent economy.
Exactly. Which brings us back to you, our listener. You've now got a handle on these key insights: the scale, the speed, the focus on applications and agents.
You understand the shift from tools to outcomes, the importance of trust, the rise of vertical AI, and this potential abundance era.
So maybe the final thought to leave you with is this. As these AI agents become more integrated, more autonomous, operating within this agent economy, what happens next? What are the challenges, the opportunities, maybe the weird side effects that weren't even discussed?
Yeah, what does it really mean for trust on a societal level? For human creativity? What does work even look like when your collaborators are increasingly AI agents?
Lots to think about. Definitely a landscape that will keep evolving.